Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep up with the cold. So as we said in previous couple of updates, indeed market was showing some signs of weakness on the intraday charts, and we suggest that, well, if even you do not want to take the short position, and that was understandable because there were important statistics ahead, so not everybody feel comfortable for taking the positions before the statistics, but at least do not take the long position currently and wait when these signs of weakness will be either eliminated or triggered some deeper action where we could consider buying on a better price. So on the daily chart, as you can see, that gold still strong down due to the recent ADP report, and actually within the few sessions it could go even lower if we will get some additional numbers from the non-farm payrolls, so not necessarily on the employment, but it might be hourly earnings that suggest inflation or something that could push price slightly lower. And in general, as we discussed a few minutes ago in the euro currency update, we suggest that market could go deeper. So theoretically, this drop might be more extended. So after the initial pullback, because in general you can see overall momentum stands rather strong here. Right from these lows, channel no significant retracement has happened. It could show some bounce, but chance exists that market could drop and more, show some kind of the compounding retracement, the kind of the ABC repatriation, something of that sort. Especially if we will get, as I said, more dollar supportive numbers from the NFP release today. On a daily chart, it's a very attractive point to consider taking the long position is 1820 area, because it's the same as on the euro currency, it's also confluence, and it's mostly accompanied with the daily oversold. So it means that if even we are wrong and market later will drop lower, at the first touch of this area, then we should get some bounce. And that's great because this led us to make almost riskless trade, as we could move stops to the break-even after the first pullback out from this level will happen. But that probably happens not today, although maybe because it's today and Friday already, and this level stands slightly below the oversold. Of course, everything could happen if, depending on the payrolls data, but chances are not very significant that this will happen. At the same time, in the shorter term, we have smaller trading setup, faster. Probably it also should last for a few sessions, because again, this is Friday and end of the week, and it needs more sessions to be completed. But take a look what we have. Market stands right now at the support. This is 1855. Here is just fib level, but if you will plot the levels from these reaction points, you will get the confidence here. So in fact, this is the confidence support, right at the 1855 area. Recent upward action is a bit choppy, but it's suitable for Napoli thrust identification, because you have at least 8 bars to the upside. Market has dropped and hit the major support area, which is a confidence actually. So in fact, we have bread and butter buy here. As you can see, we have dropped below 3x3, reaching middle level. This is in fact the bread and butter. So in fact, you even could treat it as from these lows. It's also, well, nicely looking bread and butter trade. It suggests the pullback at least to the 618 level. So take a look what we have on intraday chart. So the 4 time frame chart, this also stands the 618 butterfly. That suggests some reaction, although it suggests not 618 but just 38 pullback. It's mostly is done, but still this is also some kind of the butterfly extension. So we have on 4-hour time frame chart, this is our early signs of the reversal. So when market wasn't able to complete the same harmonic swing inside of the channel, and here we said that's probably drop is coming. Indeed, this has happened. Now on the hourly chart, take a look. Market sets in the confidence support 1855, and it is forming some kind of the butterfly is completed, and take a look. It's forming some kind of the reverse head and shoulders pattern here. So if you would like to make the scalp trade today, maybe it even will be finished before non-farm payrolls release, or maybe non-farm payrolls will not add something more dollar supportive to the existing information, because really big part of this already priced in due to the ADP. As you know, the ADP stands in 85% correlation with the non-farm payrolls release, so investors mostly already are prepared for big numbers on the non-farm payrolls. So here is forming the hand and shoulders and suggests some upward pullback. That's the target of the AB of the bread and butter trade. It's around 1890. So this is set up for a short-term scalping trade. $20 per contract is actually not small move. Potentially that could be done either today or today and on Monday. So it's not very long term. For more extended time frame, as I said, for longer term positions on the daily chart, I would suggest that after bread and butter will be completed, some chance exists that we could get ABCD. And that is very good level for considering taking the long position. Still, if you're afraid to miss or scaring to miss entry and you would like to buy the gold, you could split your position. Try to buy something with the bread and butter. Market will show the bounce, move stops to the break even, and see what will happen. If you will get the drop, you will buy the rest or the whole position here again. If not, you will have at least the position with the bread and butter trade. That's also the approach that you could use. So that's our current view on the gold market.